Go ahead, Bob.
Okay, I'd like to call the pension committee meeting to order. At this time, I also would like to turn the meeting over to Chris and Eric from Lesko Advisors.
Wonderful, thank you. Good morning, everybody. Thank you for welcoming us in today. Our colleagues Tim Tyndall and Jim Gould couldn't make it, so happy to be here again to see all of you. My name is Chris Marioni. I'm the Chief Investment Officer at Lesko Advisors. At the firm, my responsibilities cover all of the functions related to investment research and analysis, as well as portfolio management. I'm happy to bring my colleague, Dr. Eric Morris, with me today. He's a portfolio manager as well as our staff economist, so he'll be touching on some of the things we've been seeing in the macroeconomy and how that relates to your portfolio. So thinking overall in the first quarter, the real theme in the quarter was changing expectations. At the start of the quarter, expectations for economic growth were relatively mild, and with that came the expectation that we'd be seeing inflation come down, which would then open up a path for the Federal Reserve to start lowering interest rates. That is not how the quarter played out. We ended up seeing growth numbers throughout a range of different economic variables that were better than expected. That, on the surface, is good news. What that also was accompanied by was higher levels of inflation than were originally thought. And so because of that, the changing interest rates that we were expecting, the market overall was expecting earlier in the quarter really hasn't come to pass yet. So we'll be talking about the details behind that. But the main point behind that is, broadly speaking, the stocks in the portfolio had a very good quarter as the economy was doing better than expected. Right? That's good for the stock portion. The impacts on interest rates meant that most of the bonds in the portfolio lost a small amount of value during the course of the quarter. So we'll see some of the details as we go through the report. So on page 1, we'll start with the non-salaried plan. The total amount of equities in the portfolio is pretty similar to where it has been in prior reports at 65.6%, with the remainder in various other types of income-producing securities, whether that's traditional fixed income, real return assets, which includes TIPS or Treasury inflation-protected securities, as well as some cash that is there to handle some of the contributions and withdrawals that go in and out of the portfolio. But generally, no significant changes on this page. On page 2, we have the breakdown of the equities within the portfolio. About 70% of those are in the U.S., about 30% outside of the U.S., and of the total equities, about half are in U.S. large cap stocks. So these are the largest, most influential companies in the markets, but also a lot of diversification outside of those into smaller companies, as well as some of those international investments as well. Generally no change here to the composition of the equity portfolio either. And then on page 3, we have the fixed income portion of the portfolio. The vast majority of this is in what's labeled intermediate core bond. So this is one slice on a pie, but within that represents really all of the investment grade bond instruments within the U.S. So it's including Treasury debt, other government agencies, as well as corporate bonds and asset-backed securities. And then another 10% in government bonds on top of that. And then page 4, this is the TIPS, the real return portion of the portfolio. A mix of TIPS that are just short term, so up to about 5 years, as well as some that are broadly distributed across different maturities. And TIPS, based on the name, Treasury Inflation Protected Securities, as mentioned, inflation came in a little bit higher than was expected over the course of the quarter, so that was a benefit for the TIPS in the portfolio relative to the more traditional bonds that we have. And that brings us to page 5. So this is the reconciliation of the market values as well as the returns ending March 31st. And so we can see the quarter to date column, the portfolio had a total return of 5.03%, which was really an investment gain of $1.8 million after you net out the net contributions, withdrawals, as well as fees is netted out there as well. Looking at the 1 year period, so I believe this is fiscal year end here, a 15.1% return for that period of time. And then looking longer term at the since inception number of 7.63%. On page 6, we have a breakdown of where the different parts of the markets that were invested in, how those were performing over these different periods of time. If we look at the quarter to date column here, we see overall, I've mentioned the equities had pretty strong returns for 3 months. The equities in the portfolio were up 7.96%. And you can see how that, where that really comes from, with US stocks having better returns than international stocks. But within the US, the large cap stocks having the highest returns at 10.56%. And then when you get into other size companies or other markets, again, positive and in absolute terms pretty good, just not quite as high as what we saw from the largest companies. Within fixed income, I had mentioned the returns were a bit negative there, and we do see that down a little less than 1% on the fixed income. And then tips were up 0.25, and when those are combined together, that gets us to the 5.03. Looking since inception, we've seen, for this period of time back to the start of 2020, there's been a lot that's happened over that time, including a couple bear markets. And even on a net basis, after all that, we see equities in the portfolio up 10.44%. A small loss in the fixed income of 0.68%. We actually see real return assets that have gained in value, which again makes sense when we think about the inflation that we've seen since that time, that we'd see real return assets outperforming fixed income over that period of time, bringing us to that total return of 7.63%. And then on pages 7 and 8, we have the holdings that are within the plan. So I'd be happy to answer any questions about those, but don't plan on covering those in detail otherwise. And then the next section, we get into the salary plan. So the structure of these investments is the same, so these numbers are pretty much in line with the non-salaried plan. At the highest level, the equity composition. On page 10, the composition within the equity portfolio, as well as the fixed income and return pie pages here as well. And so then the total returns, again, are very similar to what we saw on the non-salary plan. And then in tab C, we have the Utica plan. And again, this is going to be a pretty similar story here, where the portfolios are all set up the same way. There's different cash flows, of course, that can make some minor differences in the allocations as well as in the returns, but generally very similar between all 3 plans. So in the Utica plan, the quarter-to-date return of 5.02 is very close to what we saw from the others as well. And the holdings are going to be roughly the same between the plans too. So with that, I covered a lot of pages here. If there's any questions about any plans or the investment structure, I'm happy to talk about that. Otherwise, Eric can get into some of the economic information.
You're not using perpetual preferred at all, correct?
That's correct.
Which is a good thing. And then what about the floating rate funds? Do you know any of those?
We do not. No.
I view that as a good thing.
All right. Thanks again for having us. Happy to be here and talk to you a little bit more about some of the macro trends across the economy that have been going on, and talk a little bit more about capital markets and how they've been affected by that. I'll try to keep a little time for questions at the end, and it's always nice to have any of your questions, the opportunity for us to answer them. So please, if you have one on the way, feel free to ask. If you want to say it at the end as well, that's fine too. If this meeting is your meeting, we'd really like you to had any of your questions be answered. So I'll dig right in. We're actually going to start in on page 26, the title Stock Market Leadership. At the top of the meeting, Chris referenced the fact that expectations have been something that have been driving markets, and really expectations not being met in various ways. And one of the things that has happened over the past maybe 5 quarters or so is that the expectations of an economic slowdown have not come to fruition. It just hasn't materialized. That R-word recession hadn't come into case. In fact, quite the opposite. Economic growth has been really strong, and that's really benefited the stock portion of your portfolio. The stock market, though, has really been driven by, and this is not news to any of you, I'm sure, is really driven by some really marquee headline names that are tech companies, large companies, and those companies have really driven a lot of that growth in the market. I'm sure you saw a similar looking slide to this the last time Tim and Jim were here talking about stock market leadership of those companies and how they are increasingly becoming the larger portion of the S&P 500 index. And it's nice because about half of your equity holdings are these made up of part of these large cap companies, not just these companies, but other large cap companies as well. So it's been nice to own them. But we're starting to see some divergence in that. The Magnificent Seven, which has been this moniker given to the 7 large tech-oriented companies that really outperform, is not so magnificent anymore. There's been some that have continued on with their performance and some that haven't. And it's that divergence, I think, that we see that has been part of the risk all along of these companies, right? And it really is the case for the fact that once companies grow a lot and get into that top 10 of all companies, their performance may continue or it may not. And oftentimes it starts to reflect the broader market. So it shows that there's really a case here for a diversified portfolio. There are other components of the market besides large cap that you own that could perform well in the future as well. And that's why we have that diversified portfolio. So for patient investors, it's been nice to watch this story. But at the same time, it's also comforting knowing that you're diversified across the board and that other sectors, small cap, value, international, could also perform well in the future after this. If you flip down to page 27, this really digs deeper into the growth story. About, if you think back to the beginning of 2023, the mood overall for many was one of pessimism, was one of thinking that the economy was going to fall into a recession. We were grappling with inflation, high interest rates from the Fed. There was no way the economy could withstand this and that inflation could improve. 2023 expectations were really poor. But again, that didn't come to fruition. We went through 2023, economic growth was really strong. You can see on that chart and in the top right there, the dark green portion of the real GDP it's showing there is consumers. And consumers were really the hero here for economic growth over the course of the past 5 quarters, but actually going back even further. Consumer spending makes up about 2/3 of the overall economy in terms of real GDP. And so consumers, when they're continuing to spend, this has a pretty significant impact on the overall economy. It's really kind of that stable, solid piece. And consumers have continued to spend. In light of higher prices, right, in light of some of this economic uncertainty, in light of people's really negative sentiment and bad mood about the overall economy, consumers still have continued to spend. And that has really buoyed the economy. We had data that dropped yesterday about GDP for the first quarter of 2024. And while that data was actually below expectations, it still reflected a healthy growing economy at 1.6% annual rate. So again, the idea of a recession, it just hasn't materialized yet. Now, looking into the future, could a recession happen? Could economic growth turn negative? It's anybody's best guess. Professional forecasters who get paid big bucks to try and call this stuff don't do this with any measure of success. Nobody has predicted economic growth with any measure of success consistently over time. It's really, really impossible to do. In fact, I'm an economist, and I say forecasters, there's only 2 kinds of forecasters in the world. Those who don't know, and those who don't know they don't know. Right? And we'd rather be the first and acknowledge the fact that the future is uncertain. And it's actually the basis for how we craft our portfolios is knowing that the future is uncertain. It's impossible to know. People that predict it can be right once, maybe twice, but it's impossible to be right over a longer period of time to really make these calls. So having that diversified portfolio that's built around many different asset classes that perform differently in a number of different economic environments is a really solid thing. And it's solid for organizations particularly like Centro and its pension fund that is looking into a longer term time horizon. If you flip to page 28, for those of us that think about the economy, it's no surprise that with an economy that's growing and expanding, that this is supporting a really robust job market. And this is, no secret to any of you thinking about the fact that right now, there's really high demand for workers out there. A lot of organizations are having trouble filling roles. There's really a lot of demand for workers to help contribute to this economic growth. At the same time, the supply of workers is not meeting the demand. When the supply of something doesn't meet the demand of something, that typically drives the price of that thing up. And that price of that thing that we're talking about is labor or wages. And so wages have been growing. They were growing fairly quickly about a year ago, but they've actually slowed in growth, which might not be great for the workers, but in terms of the macro economy, this is actually a positive thing. Wage growth can feed inflation, particularly services inflation. Service organizations, say like Centro, that are dependent on people. One of the primary costs is wages, so that gets passed along in the form of price increases. So it's okay to see a little bit of a dampening of the growth. You want to see wages growing, it's good for workers like we said, but this might help with overall inflation if we see that coming to better balance with the demand and the supply for workers, which is really what the graph on the top right of this page is showing. That dark green line is job openings. We use that as a proxy for the demand for workers. And the dotted black or gray line there is the number of unemployed individuals. This would be like a proxy for the supply. So we are starting to see these things come into a little bit better balance, which is softening that wage growth a little bit. So this is healthy for the overall economy, but really the unemployment rate is still remarkably low. The job market is still, I would say the labor market is robust. And as long as that economic growth continues, this is probably going to be the case. If you flip to the next page, page 29, I mentioned inflation. I mentioned how wages play into that. We all remember the fact, or we all know the fact that we're still grappling with fast growing prices, faster than normal. Certainly the inflation picture has improved since the summer of 22 when we saw a 9.1% year over year CPI growth. That was really uncomfortable. Of course, inflation decreases purchasing power, so it's a bad thing for people. We try to keep inflation under control. The long-term target for those that are in charge of targeting this at the Federal Reserve is 2% inflation. We are still above that target. In fact, we've made a bunch of progress to get back towards it, but you can see that in that graph on the top right, that line has sort of middled out around 3%, the low threes, somewhere in there. And that is remarkable progress, but it's not quite to target yet. So there's still a way to go to get inflation back toward the levels that we want to see. Now, again, it's impossible to know what the next inflation reading will give, but when we think about our hopes for inflation, there's a couple things that give us hope that it will continue downward. And really part of that is the fact that if you look at the graph on the bottom right, those dotted lines there are things that tend to lag in inflation, particularly that shelter line, that one with the really small dots there. Shelter is a really difficult thing to measure in terms of the price of it for the overall price basket. When we measure inflation, we try to measure things that impact everybody, and people all pay for their shelter in different ways. Meaning some people own and some people rent. And if you rent, maybe you're on a month-to-month lease, maybe you're on an annual lease, 2-year, 3-year lease, who knows? If you own your house, maybe you have a mortgage on it. Who knows when you got your mortgage? Maybe you refinanced, maybe you didn't, right? Maybe you own it outright. These timing mechanisms in different ways, it makes it really hard to measure that inflation. And it also makes it so that the measurements of that shelter inflation lag behind. So shelter inflation has been coming down, although it remains elevated over the overall level. But there's a lot of hope that that shelter piece will continue to contribute to softening inflation, which means that rate would hopefully go down. Part of the reason that that's such a big hope is that shelter makes up about 1/3 of the CPI measure. So it's a really big contributor. So if that continues to come down, then that could really help. So we're watching this very closely, and that inflation piece is important. Not only are we watching this closely, but if you flip to the next page, page 30, the Federal Reserve is watching this very closely. And this is one of their primary jobs. The Federal Reserve is assigned with 2 jobs in the economy. There's a dual mandate. One is to keep people working as much as possible, targeting full employment. Many people that want a job hopefully can get a job. And then the other is to have some semblance of price stability, which is typically traditionally defined as inflation around 2%. So this is one of the Fed's 2 jobs. they are very interested in this. I'm sure, again, it's not news to anybody. The Fed increased interest rates in order to try to slow economic activity. They wanted to slow economic activity to try to cool down prices. The hope was that to slow economic activity enough that it would cool down prices, but to keep the economy out of recession. It's a very tough needle to thread. The hope was for something called soft landing. Some of you might have heard that before, which means that inflation would come down to its 2% target without the economy having to go into recession. The Fed raised its interest rates up to a level we really haven't seen in 40 years. I should say at its quickest rate in 40 years. And the Fed has left those rates unchanged for a while. It's sort of communicating that it wants to see, it feels progress has been made and it wants to see more data come before the broadly anticipated rate cuts that Chris mentioned at the top of the meeting come. But certainly the economic growth that we've seen, strong economic growth, the labor market we've seen, a strong labor market, and the inflation that we have seen progress on but still isn't at target, none of that is really contributing to the Fed's feeling that it might be time to cut rates. Now, the Federal Reserve meets once every 6 weeks, and they have a press conference afterwards. This is new as of 2018. For those of you that remember the Federal Reserve of years past, there were no press conferences. There was nothing communicated about this. You kind of like your best guess, right? So people are watching this very closely, and the reason why they're watching this closely is because the Fed's interest rate decisions have an impact on the entire economy, and it's a big deal. So the expectation is that if the Fed does cut interest rates, this could be really good for companies, right? That you have ownership in, their earnings could go up, people could have a boost and have more spending going around. But it doesn't seem like the economy really needs that right now. So it's kind of an interesting time. The Fed had communicated that it did expect to cut rates this year. In fact, at the beginning of the year, it expected 3 rate cuts of 0.25% apiece. The market had expected the Fed was going to cut way more than the Fed communicated, 6 rate cuts. But now the market only expects about 1 rate cut out of the Fed. And the Fed hasn't updated its communication yet. They'll do so in June about what they think. Again, expectations don't always come to fruition, right? So the expectations are not written into stone, and they're also based on forecasts, and you know how I feel about forecasts. So anything can happen here, but we're watching this very, very closely. So I want to be cognizant of the time. I feel like we've got about 5 minutes left. There's some more information in this book having to do with valuations, which is important for how we base some decisions in our diversified portfolio, and talking about different components of the market in terms of small cap and value and profitability. But this is yours to review. Are there any questions that you have? Yes.
One question for my ignorance on AI, the AI stock. I noticed that has been increasing a lot, and but my question, I'm looking at that. I noticed it being increasing a lot. I see some people are afraid of it, and some people are not. Tell me a little bit more about that.
Yeah. So artificial intelligence is what Ms. Lawrence is asking about. So artificial intelligence is something that has been influencing stock prices lately. And the idea is this, that artificial intelligence has shown there's been some excitement about the potential applications in businesses and what this could do to businesses to make them more efficient and to make them more productive and potentially more profitable. Okay? So the exuberance around artificial intelligence is based on this expectation that it could be revolutionary, such as the internet was revolutionary or the internal combustion engine was revolutionary. So what many investors have been seeing with this is that they've been saying, okay, well, there are some companies that are doing this right now that we feel like have the potential to really leverage this technology and grow their businesses. And so investors have been sort of piling into these stocks. Now, these stocks, yeah, there's an excitement around their applications, but there's been no real application of it to really increase profits in some huge way. So what's happening is that the valuations of these stocks are going really high, which means the price of these stocks is being driven up by these investors, more so relative to their earnings, which haven't come to fruition yet. Now, let's say that artificial intelligence does work out, and the earnings could then come into better balance with the price, and then those people, could benefit. But there's a couple risks with that. There's a couple pieces of uncertainty, right? One is, the biggest risk is AI actually going to be as revolutionary as everybody says? It's hard to know. Right? And if it is as revolutionary as everybody says, well, are the companies that are the current leaders now going to be the ones that benefit from it most, more so than other companies? That's hard to say too. And then finally, if they are, well, that's already baked into their stock prices right now, right? People have already factored that into that decision. So there's a lot of risks with piling into the AI. It's something that's really interesting to watch because it is exciting. It's nascent. It is, it's reminiscent of the early days of the internet, and how will this be applied? How will it play out? We will see. But there's also a whole slew of things, and not for me to act as an authority on. There's a whole bunch of considerations for regulation and how this will actually be applied that I think we all need to think about a little bit. So I hope I answered your question.
Yeah, you did.
What keeps you up all night if there's something that's worrying you the most about the market?
Do you want to take this one?
Yeah, thanks,
It's our CIO.
Sure. So I think a lot of people may answer this with the election that's coming up this
Yeah.
fall. That's been a big topic for people. So I think probably a good thing for us to be talking about, especially at this point, now that it's still somewhat in the future. As we get into the later months, it's going to become more and more emotional, I think. So how do we think about the impact that elections have on markets? We don't know what this one is going to hold in terms of which parties are going to be in power or the effect that it'll have. But we can look at history and say
The one thing that kind of I can't get my hands around is with inflation growing, wages are growing. So cost just keeps on being pushed off to the person that's going to end up with the product or service. That's becoming, to me, a problem with, I don't see the end of that.
Yeah.
Because it just, these costs are real costs. And so somebody says, well, I can't believe it's that much money. Well, you think about the production, who produced it, the cost of labor, how it was shipped, the cost of transportation, okay, and then all those other costs in between to you. So that's something that I've been trying to, I've never seen things grow like this where, and this is no disrespect, if a 16-year-old can make $22 an hour fast food, okay? So I mean, these are real things that are occurring. Like if I was 16 again, I would just work 3 jobs and I would park cars at the casino just to make sure I covered it all. Okay? So, I mean, those things kind of just, I don't see it settling right now. And labor is very difficult. In the business I'm in, I can't find accountants, IT, blue collar workers, tradespeople. I mean, they're just, I don't know where they are. I really believe that aliens came down and took people. It's the only thing I can come up with. But it's a problem. It's a problem.
Yeah, it is. If you take a look at slide 28, and this is where our employment slide. The chart on the bottom right might actually resonate a little bit with you. What it is it's looking at the labor force participation rate, but instead of giving the actual rate, it's looking at it on a relative basis from January 2020, assigning that a 100 value, and saying, okay, well, starting in January 2020, how did labor force participation change? And if you look at the dark green line there, it shows the labor force participation rate for all ages, which means ages 15 to end of life. And then if you look at that and trace that, you'll see that the participation rate is actually lagged behind 2020 levels. So this gets to that point of like, well, where did the people go? Well, a really, really interesting phenomenon happens when you actually look at just one smaller component. It's actually not a small component, it's a pretty big component of the demographic there. If you narrow it to ages 25 to 54, which is what economists sometimes insensitively call prime age. There's people that are in their prime far past 54. But prime age workers, 25 to 54, which are a really important part of the economy, their participation rate is actually above pre-pandemic levels. Now, if the overall rate is lagging, but that core of prime age is above, well, what does that say? Well, that says that there's a whole bunch of people 55 and older who left the workforce and didn't come back, so much so that it's dragging overall participation. So there are actually more people working in the economy today than there were in January 2020. And that's actually been the case since 2022, which is kind of wild. But the population has grown, and people who are nearing retirement, who might have worked for 4, 5, 6, 7 more years, left the workforce in a big way. And that's driving, that has ripple effects. It's not just that you can't find a 60-year-old to work at a service job.
Well, they still
but
got gas in the tank, you know what I mean? And
Absolutely.
A lot of those people, I don't want to see them.
and it has an effect downstream too.
Right.
So on the 25-year-old who might not have had a job, who would have taken a job somewhere else or looking for a job somewhere else, now gets the job that person wasn't working in. So it has downstream effects. Now the labor supply is increasing, and that's largely due to immigration. Foreign-born workers are making up a larger portion of the new workers that are coming into the job market, and that's been a tremendous, we call it a tailwind or a help to the labor supply, which has really helped bring the labor market into more balance. But it remains imbalanced, and that's what that graph in the top right shows, is that the labor demand, that dark green line, is outpacing the supply, which is those number of unemployed workers there. And for as long as that's the case, the situation we're seeing today is going to stand. The one thing I would say about the costs feeding inflation and how it's hard to see an end to that, it's true that there is a cycle there. There is definitely a cycle, and the worst case scenario of that is something that happened in the 1970s, which is a wage price spiral. Very difficult to get out of, very difficult to break. The short of it is prices go up and workers say, boy, I can't afford prices, I need to get a raise. They ask the boss for a raise, the boss gives them the raise, and then all of a sudden the boss needs to figure out how they're going to pay for that raise, so they raise the prices and multiply this around 300 million Americans and however million companies, and that turns into a spiral, and that's a difficult thing and that's a tough thing. But the thing that the economists really look at is not just how much you're paying workers, but also what you're getting out of it. So you're bang for your buck. And the secret weapon here is productivity. So if productivity increases, that makes it such that this spiral doesn't carry on. Right now, productivity has been increasing. Now, the hope is that it continues to and things cool off before that spiral goes out of control. And by many indicators, there is no real sign of that, but it does create pain, even with productivity increasing, when you see those higher wages feeding higher service costs, feeding higher prices, and so on and so forth. So,
Good, thank you.
you're welcome.
Two things. First of all, isn't one of the ingredients of the inflation the tariff that was imposed in the past? The tariffs would have worked if we could make the stuff competitively in this country, but we can't compete with slave labor. So all it was a sales tax. Okay, so isn't that part of the critical problem, the inflation number? And then I have another question.
Yeah, I don't know exactly how the tariffs, how tariffs of the U.S. are feeding directly into inflation. On a theoretical level, tariffs tend to increase inefficiencies, and inefficiencies tend to increase prices. So I just don't know about the specifics of it, but I would say that your instinct about tariffs increasing costs is probably on point. But what was your follow-up?
Okay, the follow-up is interest rates. Okay, I work with a bunch of people that are in their late 20s and 30s, and I hear all day long they can't afford a house. Okay, and interest rates, we could argue we're kind of normalized. My first mortgage was 10.5%, and then my second mortgage was 7%. Okay, but I had the ability, which was taken away from us, to deduct my state and local taxes, my property taxes, and I had the ability to deduct my mortgage expense. So my effective cost of capital on my 10.5% mortgage was 5.25%, and on a 7 it was 3%. So isn't that a component that is affecting the vision of interest rates being high?
Yeah, so interest rates over time, it's all relative, right? We're all only human beings, so we only have our relative experiences. I'll share a personal experience. I purchased my first home in 2014. Interest rate was pretty darn good. Pretty darn good.
and you can deduct it.
Yes, in the state and local tax exemption, you know, in the political arena, this is become political football, right?
Yes.
You know, and unfortunately, and politics certainly isn't my specialty. Isn't anybody's specialty? I refinanced in the fall of 2020. Big win. And then my wife and I found our dream home last year, and we gave up that mortgage and got into a new one. And I'll tell you, with interest rates being relative, in my relative experience, that's painful. And you think about people who came of age, maybe millennials who are, you know, started working in the aftermath of the great financial crisis, where interest rates had dropped to low levels, and then, you know, the maturity around their financial life was, they become accustomed to low interest rates in these ways, and now they're seeing interest rates where they are today, far cry from the 10% interest rate that you had. That relatively, it makes it painful, and it makes it so that the expectation that they had while they were saving over those 10, 15 years to buy a house at a 4% mortgage now has been shattered because that cost of capital that you're talking about. Now, the political implications of different policies around that certainly have an impact as well, particularly for certain states, right? And that makes it difficult as well. But I'd say that relative piece is really important, and it's really caused the housing market to dry right up, right? You have people who might have thought they could afford a house, now they can't. You have people who thought they might sell their house, not doing so, because if they sold their house that maybe they own outright, or they have their floating 4% mortgage on, they have to go to the next place and go get a 7% mortgage on. So this relative nature of this is really interesting. It's all about how, you know, we process it, and it's impossible to tell somebody, you know, hey, look, interest rates are still good today. They're 7%, and I had to get one for 15% because those people didn't face that same situation.
But we were programmed for so many years at 3%.
Precisely.
Okay.
Yeah.
Yeah.
And it's all relative.
Yeah.
And that even gets back, you know, it just gets back to this whole story about expectations that Chris started off the meeting with, is that expectations can be formulated, they can become ingrained, and then, you know, you don't make your decisions based on whether or not something is good or bad. You make it based off whether it's better or worse than expectations.
Can I see a quick follow-up to Chris?
Sure.
Want to go back to that, your elections?
Yeah.
So kind of, is it better, it's a relative term, for the economy, whether the incumbent or the new person coming in?
Yeah, thanks for following up on that. So what we've looked at data with different configurations between what party controls the presidency, the Senate, the House, and how those come together. The first point is every combination has been good for markets, right? We see positive returns no matter what, on average. But where are the differences and what's better, what's worse? What tends to be best is, read into this how you will, but where all three are not the same party, right? So the lowest returns for the market are where Republicans have full control or where Democrats have full control. So markets seem to like it best when there's a balance of power, which, you know, maybe that's because it makes it harder for the government to do anything. I don't know, right? But historically, that's what the data has shown, right? So, you know, it's hard to tell, you know, on all of those fronts what to expect this fall. Generally, also, we do find that the fourth year of an election cycle, so the year that we're in, tends to be positive, a little more than above average.
Trying to get reelected.
Yeah. Right? Yeah, so there could be reasons for that. You can come to your own conclusions on that one too, right? But that's what we've seen so far.
Any other questions? Yeah, thank you for the presentation. Great job. Thank you for answering. Thank you all.
Good. Thank you for the questions and your time.
You guys do better than those other people.
Tell them that every day.
Tell them Nick said that.
Bye.
Okay, welcome to the Audit and Finance Committee. We're gonna talk about we're gonna talk about a little excess liability policy renewal. John, can you come up and give us our, good news?
Good morning, everybody. Our excess liability insurance is to be effective on May 1st. It's, I've got a little handout here that's an estimate, because we now have, as of this morning, 2 pieces with a firm price. And I'll give you the new price on the second layer. And you can do the stuff, it's pretty much the same, but let's talk about the money. Our first layer is $5 million of coverage. And last year the cost was $654,365. This year, that cost is $723,755.63. The rate itself is up about 10%. The rest of it is the terrorism premium charge and the excess lines taxes. This morning early, and I didn't have a chance to reprint all of these, we got finally a confirmation on our second layer, which we estimated the second and third would be 10% increases. Well, we did a little better. Hudson Excess, which is part of Munich, the renewal will be $493,719 compared to $451,700. And on your sheet, you'll see that the last layer is estimated at about a 10% increase. And we're waiting to see which company is going to be willing to do it for us. I believe it'll stay the same with the Lexington. The marketplace, guys, is just crazy. A 10% increase is actually, it's hard for you all to believe, but it's really very, very good. I was just telling Steve that I just got an update that there was a serious claim similar to the one that we just had. And the award was $70 million, which was unbelievable. I'm sure it's going to get appealed, but this is what's happening in the insurance marketplace today. So all in all, although it's a lot of money, it's about 10% more than we did last year, but I think that our broker, which is RPS, did a great job. Problem is getting the commitments. So we got 2 out of 3, and we're very confident we'll have the third by at least before May 1st. We have to. I'm happy to answer any
John,
questions.
what are you seeing in the insurance industry? I know we all see it with our own homeowners policies and car insurance,
Right.
over the last year or 2. I think we all are feeling it. Everybody's feeling it here at Excise Insurance on a personal basis. What's going, because we know things are going on. What's driving some of this?
What's driving it is the reinsurance carriers. Look, over the years, the wildfires, the hurricanes, the floods have contributed greatly to the loss ratios that these carriers have, and the reinsurance carriers are making it up. In the commercial marketplace, it's really the property loss is effective, but liability claims seem to be insane. Yeah. I wish I could do something about it, but obviously I can't.
Yeah, and we, I think everybody here, when you see your policy renewals for all your policies right now,
Oh, it's
you're
terrible.
looking, you're, geez, what the hell did I do? I didn't use this or whatever, you know? But, we're seeing it, that's why I'm really not that surprised in these, I mean, for a lot of years, you fought hard for us. We've had minimal, I mean, I've seen times when we had 2,000, 3,000, 1,500 increases. Now we're seeing a little bit more substantial increases, but I think that's within the market that we're in right now. We should have brought you in with the investment guys.
You're gonna continue to see it, but I can tell you right now, the states of Florida, California, and Texas have taken away my ability to write insurance in those states, property insurance. Because I'm a non-resident, I have a non-resident license, but you read in the newspapers, I mean, these huge companies are pulling out of these states.
That's what I heard, a lot of those carriers, they don't even.
No, come on. If you, for example, just to give you a perspective, if you have a property in Florida and you want to insure it, you can't insure your home. The only market that's available is Citizens Casualty and Surety Company, which is the assigned risk plan. And I say to my friends who have residents down there, well, okay, I've got one, it's got a $350,000 house, a $6,500 a year premium excluding windstorm, which they have to buy from the pool. I said, I'm not gonna come up with anything cheaper even in the excess lines. But just remember, you're not paying any property taxes. So, I have a little empathy.
Right.
When I just got my bill, I'm saying, okay, I don't feel too sorry for you. But
Isn't the other side also, we talked about the 30-year-old who can't buy a house because he thinks the interest rates are high.
Yeah.
The insurance companies just went through a relative period of very low interest rates, 2%.
right,
And insurance companies invest money.
that's where they make their money.
That's where they make their money, so because they were faced, and they still kind of are, low interest rates, that contributes to the premium.
Absolutely. And it's hard for me, and probably all of you, to get around the billions of dollars that have gone out in the last 3 or 4 years. I mean, those are huge, huge dollars, and it doesn't make any difference how big you are. It just hurts. And they're gonna make it up on everybody, so we all pay for it.
So the advice you're giving us is when all my friends and family here see their insurance go up and they wanna call their broker, don't even call them.
Well, you can.
I agree.
You can. Insurance companies are not infallible. In spite of all the technology in this world, I still operate, we check everything. And those computers aren't always right, guys. So if you get really unhappy, don't feel bad about checking. It's not gonna save a lot of money.
Any questions for John? Might I have a motion? So, Darlene, second, Tony, any discussion? All in favor? Aye. Thanks, John.
Okay, thank you, guys.
We did
Have a
budget,
great
we
weekend.
did budget for that increase too, almost
I'll get you
10% increase, so.
And I know you're way ahead of the game, so I wouldn't have. I wouldn't have even. Okay, folks, we're gonna go into, there's no financials this month, this is, end of the year, guys.
No financials, I do have a couple items at the end I wanna discuss. when you're done.
Okay, so, resolutions, this is a nice thing to talk about, pest control.
Mr. Chairman, good morning, everyone. This resolution is for pest control services on the CNY Central bus fleet, all of them. This will be paid for using operating funds. The invitation for bid was publicly let on January 16th. 26 vendors were invited, 4 of which were minority and women-owned business enterprises. In total, 18 bid packages were downloaded. On February 7th, 5 bids were received, with the lowest responsible bidder being Orkin LLC. A full waiver for MWBE participation was approved by New York State Empire Development. Therefore, it is our recommendation that the board award the contract for pest control services to Orkin for a full 5-year term.
This is a change. We've had another vendor for a lot of years.
Yes, Ehrlich was our previous vendor. And it is worth noting too that on the price sheet that you see here, there's no annual increases. In fact, there are, for Orkin, there's a 2% year-over-year increase for 2, 3, 4, and 5 those years.
Okay, any questions for Chris? Straightforward. Motion? Darlene, second. Tony, any questions? Go ahead.
I'm just more so curious why Orkin is at 2050, maybe I'm reading this wrong, but primary care homes at 508.
Right, so priority care home services, they're a certified vendor, they're an MBE. They actually bid on our trash pickup services as well a few months ago. We've looked into them a little bit. Their description on the MWB database states that they provide staffing care services to clients that are elderly or disabled and provide cleaning services as well. So I take that as them. They're out of state as well, but they would hire a subcontractor to do all of this work for them, is my assumption on that. That's why they're so far out of the realm.
Yeah.
of the price.
Do they, well, that's
Good catch. Okay. Paul.
You already got it down.
Yeah. Okay. All right, Chris, thank you.
Thank you.
Kayla, we're gonna talk about legal services.
Thank you, Mr. Chairman. Good morning, everyone.
Good morning.
So this is a resolution for legal services, and this will be paid for with operating funds. So this request for proposal was publicly let on January 25th. We sent out 56 proposal packages. 39 of those were sent to minority and women-owned business enterprises, and 33 proposals were downloaded. On February 15th, we received 5 proposals, and the evaluation committee determined that for general corporate and accident litigation, Mackenzie Hughes offered the most advantageous proposal. For labor relations, Farrar Fiorenza offered the most advantageous proposal, and for pension services, Bond, Shenik, and King offered the most advantageous proposal.
And that's a change, right?
Yes, that is new. Yep, pension service is also new to this contract. We added it in this time
Right.
around. So. This contract does have a full 30% goal for MWBE utilization. So therefore, it is our recommendation that the board award the legal services contract to Mackenzie Hughes, Farrar Fiorenza, and Bond, Shenik, and King for their respective portions.
How much is the contract worth?
We are estimating about $2 million for the full 5 years based on past history. And the pricing stayed relatively the same.
But
This is
I
a
feel like
range.
this should have the pricing.
I can do that moving forward. The range is, there's, I believe, 4 or 5 different staff members for each.
Understood, they'll probably give you a billing rate or something.
Yes,
to-
exactly, an hourly rate, yep, for.
I think that would be helpful to see.
Absolutely.
I don't have an issue with the selection.
Neil, do you wanna bring it back? Do you see it?
No, that's fine. In moving forward, I think if we're gonna approve things with, a dollar amount, we should know what the dollar amount is. Or if it's, legal services,
Yeah.
maybe we have a do not exceed, or at least we have a billing rate there so we can see who was selected and why.
Robert?
What is
Good point, yeah.
service entail? The Bond, Shenik, and King.
So basically, Bob, it's going to entail updating our pension plans and making sure that they are adequate and in compliance.
Is it part of the audit?
Is it part of the audit? I don't know if it's part of the audit. In the past, we had another firm handling that service. However, we didn't have it contracted, so that's why we added this legal services.
But it's kind of required.
Yes, oh, absolutely, absolutely. It is.
You might have, is there certain filings or something that they have?
Usually there's like IRS filings,
Right.
however, though we are not required under the IRS.
Right.
Because of the pension plan that we have.
Okay.
But we've had them filed in the past.
And they're protecting the trustees from the liability.
Right,
Yeah.
right, and they're updating all of the contract, all of the pension plans. So all of the changes that we incorporate in those pension plans, they have to update our plan legally.
Any amendments to the plan?
Correct.
Okay, so, Neil brought up some good information, Caitlin will get that out to us.
Yes.
Thank you, Caitlin, thank you for the work, to go through all this. I have a motion to move this forward. Neil, second, Darlene, any, discussion, any questions? All in favor? Aye. Thank you. Okay, Tara,
So this will be the green sheet that was on the table.
the master grant agreement for, New York State DOT.
Good morning.
Good morning.
Good morning, everyone. So we had a little bit of a late entry, but really good news. We got the New York State Department of Transportation Master Grant Agreement. And I am looking to get an approval on that. And the initial agreement is for $12,284,075. And that encompasses both 100% state dedicated monies and also 10% state share to our federal grants in 2023.
Questions for Tara? Did we accept something here?
So moved.
All right.
Thank
Only
you.
second, Neil, any
I got it.
discussion or questions? All in favor? Aye.
Mr. Chairman, if you could stay after the meeting to sign the agreement again this time, that would be great.
That's proper protocol for you.
Thank you.
Thank you, Tara.
All right, Linda has a few things she'd like to go over.
So, you had the preliminary, or our final budget, last month, and we said that if the state were to pass something in the final budget increasing our STOA, that we would have to bring in an amended budget, and we will have to do that, we'll bring it to you next month. The New York State final budget passed, with us having an 8.66% increase in our STOA. So that amounts to about $4.3 million over, fiscal year 2024. So good news for us. Also, this week, Tara applied for a low-no grant in the amount of $12 million. It was due this week. In that grant, it was 4 Gillig 40-foot hydrogen fuel cell buses, a portable fueling skid, maintenance bay ventilation enclosures, and vehicle and facilities workforce training. So the total is about $12 million. So fingers crossed. I don't know if you want to talk about the level of support we got for this grant.
Yeah, this we've applied for this grant the last 3 years. The last 2 years, we were not awarded the grant. One of the parts of that was that we were replacing compressed natural gas vehicles, which kudos to us. We invested in zero emission or lower emission vehicles over 30 years ago. But now as we're getting into the zero emission market, we were replacing, based on our replacement cycle, CNGs. This grant, in the timing, we actually have 4 diesels that we are going to replace, which actually puts us in a better replacement and a better scoring mechanism. So the debriefing after the last 2 grant applications was that we were not replacing dirty diesels. And that's what they're looking for us to do. So in this case, we do have diesels in the market. And as we've talked about in the past, the zero emission technology has actually taken a turn in the end of 23 and the beginning of 24, with several battery electric vehicle manufacturers leaving the market, as well as a hydrogen fuel cell vehicle leaving the market. Gillig has come to us to partner with them on this, which is a consistent to what the fleet we have. So coming this September, our entire fleet will be Gillig minus 7 vehicles. And we have a lot of consistency from the stock room, from the repairs, from the maintenance requirements by partnering with Gillig. They recently announced this week their hydrogen fuel cell vehicle, even though we've had conversations in the past with them about this partnership. So we're excited about that. The technology that they're doing, although their announcement is new, the technology in the vehicle has been tested. It's been in the market for quite a while now. We're pretty confident with their research and their performance that this will be a successful product. So, we have support across all of our delegations, our federal, state, and local. This is the largest number of letters of support we've received in the application the last 3 years. I think minus a couple people, which is given the situation that happened 2 weeks ago here in Central New York, made it, I think, a little difficult for a couple individuals to provide letters of support. But we've had, I think, 15 letters this go around, which is huge, which included, you know, our senators, Senator Schumer and Gillibrand, as well as our local, state, and local electeds. So we're extremely excited about that, and we're hopeful that this is going to come through, that we're going to get an award to dip our toe in the zero emission market here in Central New York to really see if this technology will work for us.
Yes, so next month we will bring you the amended budget and you will get preliminary March financial statements. That concludes my report.
Very good, okay, we'll adjourn this meeting in a couple minutes, we'll get going with the regular meeting. start with the Pledge of Allegiance here today. EJ asked me to take the lead, so I'm gonna give it to
I pledge
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
I'd like a moment of silence, please stay, for three individuals. Our Syracuse operator, McKinley Baldwin, Onondaga County Sheriff Lieutenant Michael Husak, Syracuse Police Officer Michael Jensen. Just a moment of silence. Thank you. We have a quorum present. Our next meeting date is May 17th. We have audit and finance at 9, board meeting at 9:30. We have a motion to approve the regular meeting minutes of March 25th. Julius, second Tina. Any discussion? All in favor? Aye. Remember too that this meeting is a regular board meeting and our annual board meeting, so election of officers will come at the end of the meeting. And I will also be going through the board committees too. Okay, Mr. Tuff.
Thank you, Mr. Chairman. Good morning, members of the board. Just an update on the COVID money. We didn't draw anything down in February, but also with the closing of the fiscal year for March, at the time of writing the report and where things are going, they currently haven't drawn anything down for March. So that's why there's no change there. The state budget update, Linda kind of threw a highlight of the state budget coming out at an 8.66% increase in STOA, which happened between the writing of my report and today. So the $4.3 million increase in STOA for Centro, which we're extremely happy about. I actually ran into Assemblyman Magarelli last night or yesterday afternoon to thank him for that. And he was appreciative of that and putting forth the hard work to get us to the 8.66. As far as the capital money, we're staying in line with the capital funding that we received in 23-24. So at least there was no decrease there, but all positive with the state budget increase. In the last 5 years, we've done very well in our lobbying efforts across the state to come just over 50% still increase in 5 years to help support all of our expenses and our increases. On April 7th to the 10th, Chairman Leno, Ms. Brim, Ms. Dice, and I attended the APTA Legislative Conference in Washington, D.C. This conference, very informative, is an opportunity for us to get updates and see what's happening down in Washington with the bipartisan infrastructure law. But we also had an afternoon that we met with Senator Schumer's staff, Senator Gillibrand's staff, Congresswoman Tenney, who also came out to meet with us briefly at the end of the meeting, and then Congressman Williams with his staff and then himself. They all are supportive of our transportation needs and efforts, understand the importance of transportation, certainly in Central New York, as we continue to see growth in one of our announcements that I'll get to later that happened yesterday, regarding the Micron, but also our BRT project and the funding that we were able to achieve through the bipartisan infrastructure law. So, we continue to talk about those two projects, our zero emissions, and then certainly making sure that we have their support during the Lono grant that Linda highlighted earlier today. We continue with our various meetings across all areas as far as our NIPTA meetings, our RPM program, which I'll talk about in a second, SMGC, our consultants to continue to develop our BRT, and then still looking at the Oneida County Rural Transit piece that we're waiting on Oneida County Legislature to approve, which then we'll bring forth to the board for their approval. Continuing on with the RPM event, so the week of April 16th, that Tuesday, Wednesday, Thursday, several members of the executive leadership team, myself and staff, did what we call our RPM Roadshow. So we travel and make sure that we hit all of our properties in our 4-county area to recognize all employees for their hard work throughout the quarter, recognize them for years of service, but we also recognize them for their our quarterly winners. So we've awarded our operator of the quarter to an employee out of Oneida, who's a 12-year employee who had met all 4 criteria for meeting the productivity bonus, but also had accommodation for going above and beyond for a customer that really rose him to the top. So we awarded Esau Isad Sabanajic with that award. And then we also awarded the maintenance employee of the quarter to an individual here in Syracuse who's an 8-year employee on the maintenance side, who's been critical in a lot of, as we've continued to grow and more in some of our departments. He's a great guy from the maintenance and buildings and grounds team that does a lot of our finishing work. So staining of our doors, our drywall, spectacular work. I've asked him to do some side jobs. He doesn't do that because his work is that good. But it's been a conversation where people see his work and it's highly recognizable. So we awarded Steve Montrose the maintenance employee of the quarter. And this quarter closes March 31st of 2024, which recognizes and marks 3 full years that we've been doing this RPM program. The program continues to grow, and we're looking forward to see it continue to grow for adding additional caveats for awards and milestones and thresholds. But we appreciate the support from the board to continue to keep this program going, and I'm certain that all the employees appreciate it as well. As I mentioned about the Micron announcement, so yesterday I was invited to attend the announcement at the Most with President Biden and Governor Hochul to announce the $6.1 billion investment from the CHIPS and Science Act that will be awarded to Micron to develop their mega fab in Clay, New York. It was a very exciting time. A lot of individuals in the room that were excited to see this investment to come to Central New York. It's the biggest investment we've seen since essentially the Erie Canal and the investment in the economy. So we're excited about it as far as the support of this investment. We've had some preliminary conversations with the folks involved in Micron, and we're hopeful with this investment we continue to see conversations grow and how we can support that here in Central New York and support our community with that. And then lastly, as I've put out there and sent an email to all of you, our recognition in the last 2 weeks for our fallen heroes that we took a moment of silence today. But during this difficult time in Central New York, Centro stepped up to support these heroes, their families, their friends, and their coworkers. And I'm extremely proud of our staff for coming together to do that and provide that support. And I just want to thank everybody here in Syracuse. Oneida County stepped up huge, both union and non-union. Certainly, Frank and putting out the message to get the support and the drivers to do this on their day off or above and beyond their extra duties that they do on a regular basis, both here and in Oneida. So I just want to thank everybody for that, and appreciate the support to do that service as well. And from there, unless there's any questions, Julius, go ahead.
The Micron project, I know Central will play a major role. You are planning for that. You're going to be playing that, right?
Yeah. There's some studies that are taking place right now. There's a 31 corridor study, certainly looking at the development along 31 and what traffic patterns will look like. And then there's some other ideas that we're talking internally on with our service planning team and our operations folks to see, what tweaks we can make to our service to see how that area shakes out in the future to support that. Any other questions? And that concludes my report, Mr. Chairman. Peace. So I'm going to call Jackie Hussein.
Good morning, everyone. So last month, I indicated that the company and the ATU reached a tentative agreement for our large operations and maintenance contract to begin April 1st of 2024. The union voted on that contract on April 9th, and it did pass with 88% of the union voting yes to that contract. So it was a significant win, I think, on both of our behalves, Frank and our staff. The negotiated contract in itself resulted in a 6.4% increase over the next 4 years to our budget. 6.4% over the next 3 years in our budget. Some of the highlights, just to highlight for the board members, the wage increase was 16.5% over the next 3 years is what we passed. The medical co-pays increased by $5 per visit. The uniform credit for operators increased by $50 per year. A night shift premium increased by $1, so now they will be getting $2 per hour. And we actually added a weekend premium increase of $2 per hour for anybody who works over the weekends. Our defined benefit plan increased by 8% over the next 3 years. Our employer match for the 401A pension increased from 6% to 8%. And our medical furlough leave was at 18 months. Now that decreased to 15 months per injury. So again, I think that it was a great contract. Frank and I think, and our team both worked very hard to get this in and to get it approved within the 6 months that we worked on it.
I'd like to see some comments from Frank, because Frank, we were just talking, he had 85% his last contract that he's been in this position. Now he's at 88. I said, you don't want to, you know. So talk to us a little bit from labor standpoint about how's everybody feel about this?
I think everybody seems very happy. Probably the morale has greatly got a boost from this TA. I think, to Jackie's point, we got it done within the 6 months.
That's probably Kofi.
I think this might have been one of our largest agreements also. It's 15 pages long and over 100 different articles we've changed. That being said, we
Cleaned up a lot of language.
We actually got it done. We had a signed TA before the expiration of the contract. That being said, I think that shows the great collaboration I think we had, and I think both sides understood what was important and what needed to be done. And I think I want to thank both sides of both committees on both sides, and Jackie was great working with her. We said we had great collaboration. We got this done, one of the largest contracts within a record time period. We didn't take our time, or we didn't speed it up, we didn't rush, we got it done. And I think a lot of this is more than just numbers and terms of an agreement. I think this was really about boosting morale and commitment to our drivers and mechanics and employees, and showing them their value. And I also believe this agreement will address some of our critical challenges moving forward. For example, attracting and retaining employment, getting service back out on the road, bringing Call-A-Bus back in-house, getting service back out on the street. So I think we had good momentum working together. Hopefully we can keep that momentum moving forward in the days and months and years to come. So I just want to thank everybody involved, and the members are very, very happy. 88% vote is a very good outcome.
You know, a lot of people around the table here have been at the table for those, and in the beginning when you start out, you're pretty far apart on a lot of sides and on a lot of issues. But, you know, we all gotta remember this, and I say this all the time, even where I work. We're all under the same flag, no matter what, we're central, okay? So, you know, I was engaged a lot, Chris and company and Jackie told me about a lot of process that was going on, it was going in a good direction. And the board is happy to, labor peace is good. Labor peace is very good for the organization, because if not, it's a distraction. And when you have a distraction, you're not focusing on what you need to focus on. So the board, on behalf of the whole board, we're very happy. And I want to thank the staff that was involved with this, and your negotiating team to keep it moving. Because sometimes in these things, you know, we walk away and we're like, geez, you know, I really don't want to go back and see these people, but you keep it going. You keep it going for the people we provide services for. That's what it's about. Serving the individuals in these communities that need public transportation. That's what it's all about. When I walk out of here, every time I walk out of this building and take my ride back to Atlantic County, it's like, you know, are we making a difference in people's lives that need this help?
I totally, just to interrupt you, Nick, I totally agree. I just wanna thank Frank and his executive team, along with the team that was on the employer's side. We really worked hard to get this contract done within the 6 months, thinking about the employees. And it was all about the employees that we put first. So, thank you, everybody.
Okay, so with that, I'm gonna need a motion to accept this. Luella, second, Tina. Any discussion? All in favor? Aye. Congratulations.
Thank you.
Thank you. Okay, now that we got the motion and the contract has passed, we can move forward. And we're moving forward with having a recruiting class come May 22nd. We got over the next 4 months, we're going to be really getting out there, advertising it. We're going to be accepting applications through May 10th in order to do this. And our recruitment event is gonna start on Monday with a new commercial that the marketing team has put together for us. So I'm going to actually ask Steve to come up and we can see that commercial.
It's a little presumptuous of us to have commercial maybe for the vote. It's the only way we can get this done. Hold up. Of course, now.
Yeah, I had it ready.
And so we really wanted to focus on the details of the new agreement. I think it's very important to kind of separate ourselves from other employers within the market that are fighting for CDL drivers. So we thought we'd give it a little personal touch with our real employees.
Oh, no.
I need sound.
Yeah, I'm on mute. You know?
I like to walk.
I was gonna
I don't know, hopefully it's not. No, why isn't Bren? I know we went through this.
Did you share sound?
You got
a little bounce in there.
Go on the settings for speakers.
Executive ones.
Speakers.
Yeah. Oh, I know, I'm getting good at this, I know.
That should be your computer.
No.
You tried
No,
that?
maybe you got the wrong speaker.
Just stride. That's it.
Camera
Centro is hiring drivers and mechanics to keep its buses moving. Here's what we have to offer.
Our new starting rate is $27 an hour.
Health insurance for my entire family is just a little over $100 a week, and the dental insurance is free.
Central offers a set schedule. In the transit industry, that's a big deal.
And you can earn extra money working nights and weekends.
And we have many opportunities for overtime. I put 8% of my salary into a retirement account, and Central matches every penny.
Come join us.
Kind of squeeze a lot of information into 30 seconds there, it makes it hard, but we thought that all that information was important.
You might need that JP suit though. I mean, you know, bounce going there, flower in you.
We tried to keep the budget low in it.
So, we like using our own employees. I
Very
like
nice.
using actors. We've used actors in the past, and it doesn't feel the same. And I'd rather have our folks who feel passionate about working here being front and center of our commercials. It's as long as they're willing to do it, we're willing to take their acting abilities. So it came out well. I want to thank Casey Brown and Lynette Figuano, who put this together very quickly and got out and worked with our employees and got the lighting right and got everything great. And, you know, I can't speak enough about the work they do for the videos and the commercials. The money we save by having these things produced in-house is substantial. So it's a great team. So very happy.
Nice job.
Thanks. Move on a little bit to ridership information for last month compared to last year. It was fairly flat, but it really wasn't a fair fight because there were 2 less weekdays this year compared to last year. So when you look at apples to apples, it's probably about a 6% increase over the previous year. City of Syracuse was up 8%. Even with the 2 days, being 2 days short. Because we have service on Sunday, doesn't affect Syracuse as much as it does the other local locales. With regard to Rome, which is the one that I'm really keeping a close eye on, our ridership was flat over the previous year. Not unexpected compared to when you change services. It takes people a while to get used to the new service. I will say that we provided 742 rides on our new Move service, which is good, and we're up to over 1,000 already this month. So it's growing. It's doing very well. One thing I would like to point out is that in Syracuse, our call bus service was up 8%. In Utica, our call bus service was up 8%. In Rome, it was down 9%. What that tells me is that some of the individuals who use call bus are now have switched over to use Move. So it's a more convenient service for them. It comes quickly. They don't have to schedule the day in advance. And we don't have a cost per hour yet, but I'm willing to assume that the cost per hour of our Move service is probably less, will eventually be less than the call bus service. But it's more convenient for the customer. If you are able to book your ride for your doctor's appointment the same day rather than book it a day ahead of time, I think more and more you're going to see more people who are able to use the service, use Move. And it becomes almost a seamless where call a bus and Move are kind of working together almost in the same aspects and seeing the same people ride the buses. And maybe at some point we commingle those individuals, but that's a discussion for another day.
Call a bus. I've been speaking to some of the seniors. Some of them having a problem in getting signed up for call a bus.
The application process can be lengthy. It's they have to fill out an application. Then they have to get their physician to fill out the application as well. And I don't know where we stand from a response time yet right now on call bus applications, but it can take a few weeks, right?
It's about, right now, we're being processed in about 2 weeks. It's under the 21-day mark that's required.
Okay.
But the biggest issue is usually the part 2, the healthcare portion.
There's
That's
often
usually where you're pulling teeth, because the healthcare providers don't do that. I helped my dad get his call bus, and I sent it back to the VA multiple times because I knew it wasn't going to clear. This is not correct. This is not correct. Try again. That's the biggest problem.
Yeah.
Depending on what their issues are, Julius, feel free to either have them reach out directly to us, or you can have me reach out to them. We can see what we can do to help process it, make sure it's not on our end, but if there's anything we can do to help, we're here to help.
Yeah, I'm hoping that on May the 18th, we'll have the thing at the church service area, have somebody maybe come explain to the people who are going to be able to help. A lot of seniors going to be there.
Okay, we'll look at that.
Judy's, my suggestion is tell them when they want one filled out to make an appointment with their doctor and sit right there while their doctor fills it out. Because doctors will hand it off to a nurse and you'll get some crazy stuff.
Yeah.
You know, they need to take the initiative to make sure that things are getting filled out right. And if somebody has a specific question, you can call me. I've been doing this for years.
Steve, is it a one time from the doctor's office?
Is it a one time? I did it once. You don't have to do it every time from your doctor.
So it's a 5-year recertification process, so it's good for 5 years. After that, if their initial application was determined in all cases, meaning they're eligible for all their rides, then there's an abbreviated application we send them that's a 1-page paper that only they have to fill out and send back to us. So the recertification is much easier.
Any other questions for me?
Is it commercial print? I'm not trying to be funny.
No.
But is it large print? I mean, I'm a senior.
It's we have them on 8.5 by 11, but we can also do them on legal paper to make it much bigger and send it to people if they request it.
Yeah, that's a good point.
The commercial, that's gonna be posted online also, I assume?
Yeah. So we'll have social media, it'll be television, It'll be YouTube and that kind of stuff. So when you're using a smartphone and you're streaming, it'll pop up. You won't be able to click through it. It'll be one of those.
You guys are gonna be really sick of seeing me.
You might also consider Channel 98, which is free.
Yeah, we bought the local TV stations as well. So.
Yeah, we have it on all the local TVs and radio. We have ETT streaming over the top device, and we have sponsorships on traffic and weather on a couple of the platforms. We've added a direct email campaign this time around too, which targets CDL operators using the media databases. So we've really fine-tuned it this time around, and we're crossing our fingers to get some great results. So starting Monday, you'll be able to see it on all the central platforms, and that'll be shared, and yeah, you'll probably get tired of seeing Chris.
Chris will get tired of seeing Chris, I know that.
One more, and this probably maybe for Jackie. So I come in, I take the class, get my CDL, I'm driving. Is there any, I mean, technically right now I can walk the next day and go to the school district. Or is there any stipulation, can we do, you know what, if we train you, we give you the CDL, kind of like the nursing schools. Because you're going for free, so you're gonna have to work for us for 2 years. Is there any stipulation that says, you know, we trained you, we gave you CDL at least for 9 months or 3 months or 1 year, whatever?
So we have nothing in place at this point.
Can we do that legally?
You could, yeah, there are things you could do. You know, you can do not, you know, covenants not to compete. Although there are restrictions on what you can do that, and they're possibly going to be banned all across the country. Another thing, yeah, I've seen that some employers do is you know, if there's a cost associated with training, you can have a contract that requires folks who leave within a certain time frame to reimburse the cost of the training, so that gives folks an incentive to stay. So there are options that we could pursue.
Do those hurt?
It's not very effective.
People leave anyway.
When people leave anyway, because you're gonna have to spend money to litigate it, and they know you're not gonna do it.
The litigation costs exceed the cost of the training.
Absolutely.
That would make sense.
I noticed on the commercial you indicate that the driver starts off at $27 an hour.
Yep.
How compared is that to other bus services or something like that?
Better than us. Better than the city.
It's probably better than most school districts.
Yeah, I mean, give or take. So, you know, if certain private school districts in the suburbs are paying more on an hourly rate, but it's on a full-time, it's a part-time basis, their schedule's different. You know, there's pros and cons on either one. It depends on what you're looking for. You know, we compare ourselves to Across the Thruway with our other public transit agencies because we're all a little different. It's easy to say you have a CDL, this makes sense, but you know, driving a truck for Cisco or driving a truck for the city is a lot different than what we're doing, even though some of the requirements are the same. But you know, we're lower than Rochester. We've always been lower than Rochester, but their progression's a lot different. So when you look at their top rate or their starting rate, it takes them 8 years to get to top rate. But they also have 2 classifications of operators. They have a call bus operator and a fixed route operator that are on different pay scales. There's a $10 wage difference between there. We pay everybody the same rate for driving either vehicle. But Albany just passed their contract. They're at $30.05. We're for their top rate. Our top rate's $30. So we're very close there.
First student just moving to $30 an hour.
And they're moving to 30 in
However,
the fall.
not everybody wants to drive kids.
That's, you know, and that's, I mean, and that's just, you know, it's, I'm sure Frank can talk about that too, that, you know, we do, you know, it's a different type of customer. But also our customers are a different type of customer as well, so.
You're Monday through Friday too.
We just made it up to Buffalo also, wages.
Yeah.
We also have a progression scale to get to $30 an hour is now our top rate.
Now, my follow-up question on that is that when the driver comes in, they have to split shift, right? Like maybe what?
They might have a break in between, yeah.
3 or 4 hours and come back.
It could be. We've done a lot of work on our end to fix the schedule, Steve and his team, to try to minimize it. So yes, they could be here up to 13 hours, but we've really gotten the majority of the runs down below 10 and a half hours in the total day. So there is a couple hours in between that we're trying to, part of this is growing our ranks and trying to do that is we're trying to shorten that time they're committed, but.
Do they still have to bid on what route they're gonna take or something like that? And like for instance, if you wanna do from here to, wagons and stuff like that, you have that, you have to bid for that?
Yeah, everything, all the runs are, once the runs are created, so Steve's team will build the runs based on the service and what's on the street. Then based on seniority levels, they will go in and bid on the work, which could encompass some of that Wegmans trip. It could encompass, so drivers would select the work based on seniority, but also based on what they want. So we've had one driver that was the top driver, took the biggest, longest run of the day because it paid the most. Other people want the shortest day. Other people want to just drive up at SU. So it varies on what they pick, but it's all based on seniority once the runs are created.
Any other questions for me? With that, I will turn this over to Brent Dice, giving an update on some of the other service special projects that we are fully engaged in.
Good job, Steve.
Good morning, Mr. Chairman. So just wanted to give you some updates on some of the other projects that we're working on. As you know, the BRT study is moving forward. We wrapped up that Smart One update, and that was presented to you in February. And we're now making the rounds to let our stakeholders around the community know where we are and where we're headed. Our land surveying is about to start for BRT. So that's where our surveyors go out, our contractors go out and are looking at the right of way and where we might be looking at stops and stations and making sure that we have room and all of that fun stuff. There's a lot of stuff in the surveying that I don't even know what they're doing, but lots of surveying will start soon for the BRT group. And to go hand in hand with the BRT service, we know that we're looking at a 15-minute service on those routes, on those 5 arms of our BRT. But if we have 15-minute service on the BRT lines, but we get to the hub and they still have to wait 20 or 25 minutes for a line bus to come through, then we're not as efficient as we should be, right? So to go hand in hand with the BRT service, we are working on a system redesign for Syracuse Onondaga County. I say we're working on it. We are working on the scope so that our consultants can help us with that project. That'll be service development and certainly a whole bunch of other teams involved with our consultant. But they are scoping, Arcadis IBI, our planning consultant, are working on scoping that project now with us. So you'll be hearing more about that system redesign in Syracuse as we're moving that forward. And to move gears to our bike share, you remember we have a contract with VO for the bike and scooter shares. I know you remember. Last year we expanded to OCC's campus, which was awesome. We saw about 5,000 rides on and around campus per month when school is in session. And this year we've expanded to the east side of the county. The idea behind this expansion is that we know where the city limits are in general, we might, but the city residents don't know where they are. So we were seeing, for example, on Thompson Road, Erie Boulevard, at Thompson Road, we were seeing all the bikes and scooters kind of piling up there because that's where the city limit ends, and so that's where the vehicles shut off, right? So they're geo-fenced. So in order to help our customers make that complete ride, working on that first and last mile segment, we expanded the service. And so now on the east side of the city, they're into the county, riders can get to the Walmart in East Syracuse, the Wegmans, DeWitt, and the Jamesville Public Library and surrounding areas. So we've expanded pretty well on that east side. Super exciting to see. Now we aren't seeing as much of those bikes and scooters lined up at Thompson Road because people can go beyond it and finish their trip.
Speaking of people riding a bike, what is age limit for riding? But most of the students people.
There is no end limit, so anyone can get on, no matter how old they are, once they're 18. So they should be over 18 to be renting the vehicles, and you have to agree to that and put your credit card in. But then there's no high end limit.
I know one person was telling me, said, why don't they have a three-wheeler?
Now, have you gotten on the 2-wheelers yet?
No, I
Because
have
it's
not.
not difficult. and it's a C.
It's not
So
for me.
Stop,
yeah.
stop.
I can set it up. I can set it up where we have scooters out there.
No. He's doing good walking, taking a bus. I wanna keep him with us.
We'll leave it at that.
Brian, how about the fair?
The fair structure is, the fairgrounds. Okay, great. 'Cause I was
That's
like,
not
I
our
don't have a
limit,
fair
is it?
structure.
For the schools?
So the fairgrounds is also out of the city limits. That has not been expanded yet. But that was, I was not gonna say exactly where it was, but certainly we're looking at some northern suburb expansion. We've had some conversations with not only the fairgrounds, but also the county parks department. And so we're figuring all that out as to where our next expansion is. And we're expecting to see that shortly, this year,
Yeah,
certainly.
because
This
somebody in between riding the bus going to see fair and cut off them right in between.
Right.
That's gonna be a problem.
And that's exactly what we're trying to solve.
No.
It's-
Or you can take the Loop the Lake Trail, take you right up there, but it cuts off, and we were talking about this last year, about, we're almost there, and then we didn't make it for the fair cutoff, but I'm afraid of that happening again, but it sounds like you guys are.
We've had some good conversations with the city. We have county. We've had some great conversations with the
Yeah,
city.
you can ride it anywhere.
We've had some good conversations with the county as well and the state fair. I think the Loop the Lake Trail may happen first, just because of timing.
Would OCC be out of their limit also?
No, OCC's in. They're in. They were first in, and we're excited to see people using them. If you look at the app, you can see they're all over the place, obviously in the city, but they're definitely being used in those expanded areas that we've expanded into. And certainly in future years, we'd like to look at our other properties and say where else can VO build their own little hub. So that's the plan. Stay tuned. That's all I've got for special projects.
Good job.
We've gotta work on your energy level.
I know.
That's what you think Julius is gonna be.
I'm tired of you watching.
Ride the scooters, ride the scooters. With his backpack.
Good morning, everyone.
Morning.
So the big topic for us is we continue to work through a lot of the operational challenges due to the insufficient staffing levels. We're very optimistic with the new contract with the union. I want to thank everyone here for approving that. We really feel that it'll decrease the operational stresses we've been experiencing and hopefully get us back to full staffing and reduce any service interruptions. So thank you again. We are also moving beyond that. We are still working on several other operational improvements, and most of those are targeted to improving either the level of service to our customers or improving quality of life to our drivers. A couple examples of those are in Oswego. We actually, a few months ago, we implemented a temporary MOU, Memorandum of Understanding with the union, which established an extra list. Just to give a brief explanation of what an extra list is, essentially it's a extra person on standby, ready to get in the vehicle and cover work for someone who calls in sick or covering a vacation, what have you. That has actually been working very well, and we are likely going to be signing a permanent change to the contract for that MOU. It'll be a memorandum of agreement at some point, hopefully very soon. Moving on to Syracuse, we also signed a temporary MOU a few months ago, which is also related to our extra list. It established set times for our extra list operators. It was an experiment. Prior to set times, we had a process of rotating the start times for all of our extra list drivers, which resulted in a lot of basically quality of life issues, inconsistent schedules for our drivers, and you know, it's when we talk about retention for our staff, this is a big one. It keeps coming up, and we're really trying our best to find ways to improve the quality of life. So that temporary MOU is also working pretty well. We're going to be doing a more thorough evaluation of it. We may tweak it, but hopefully it will be here to stay. Moving on to Rome, we've also had several operational improvements. The on-demand obviously is continues to be a success by all measures. It's actually resulted in us looking at some of the ways we do business in other areas. With the convenience that on-demand has brought to that area, we're looking at how we could potentially work on other areas such as Callabus and provide better customer service. There was a planned upgrade of our Callabus software and hardware systems. They've currently reached the end of life, and the planned upgrade really lacks what we would like to see. There's no app, there's no real operational efficiencies created from the upgrade that we were planning. So it's caused us to really rethink it, and we're hoping to bring a new solution to the table next month, at next month's board meeting. It'll probably require a board approval. But we're hoping again to improve Callabus, hopefully bring an app and better customer experience, and potentially reduce costs, because the current way we're processing all of those Callabus rides is very manual. It's all through a call center. There's no real efficiencies created. So we're pretty excited about all the things we're working on and all the things to come. And with that, I will bring Joshua Gardner up for the
Good question.
for the road report. Sure.
With your MOUs, that standby person? Are they paid or are they just?
They are paid, yes.
Yeah.
By contract, they're paid.
In the general concept of business, it's very inefficient, but in the business we're in, it's.
No, I've done that, yeah.
It's so like if you did it, there's a group of people sitting downstairs that are just waiting for that call in or that emergency situation that.
They know, yeah.
You know, they're here ready to go in uniform, you just put them on a bus and away they go, you're not waiting for somebody to show up.
And there has to be a certain threshold where, the cost of not having that extra person outweighs the cost of having that person.
Yeah.
And for us in Oswego, we find that we were there, we needed an extra person.
Yeah.
They actually come in or are they at home?
No, they're there, they're in the garage, so we could use them, they may use them for shifting a bus down here for maintenance if something comes up, so they're there available to use, but most of it is to protect the service, that if something happens, they call in, somebody calls in sick, or somebody gets sick at work or an injury. The last thing we want to do is leave the student or the employee or the customer stranded somewhere. You're expecting the bus, and then we got to send an alert saying your bus isn't coming. Yeah, so these folks protect that.
Any other questions? Okay.
Thanks. The quarterly Callabus report wasn't in your original packet, but it was placed on the table today, so you can see that what Josh is talking about.
Thank you, Ron. Good morning, Mr. Chairman and members of the board. So quarterly Callabus report, ridership continues to see double-digit increases. Requests are up about 11%, and rides taken are up about 12% currently. One good thing, our calls answered within 2 minutes increased dramatically over prior year. That's up 36%. That's mostly due to staffing. We hired 2 new people back in February, which we're starting to see the benefit of that. So we also, in Callabus, added about a year ago, we had an RPM award. So if they meet certain criteria, they will get a bonus. This was our first time meeting that. So everything's looking up, and that's 85% of calls answered within 2 minutes. Tina, you were out in Washington, and I called Washington for Tina, and I think I was on the phone like 20 minutes, and I was oh my gosh. And so
What all those people in Westchester?
Yeah.
Trying to fix that in the place.
Yeah, so 85% in 2
We have the
minutes, I think, is
greatest call bus
tremendous.
system ever. I think you can get in other areas. They stink. We rule.
That's our next marketing campaign.
I'll star in the middle of that commercial.
I'm a witness to this.
Yes, Nick is a witness to how
Dysfunctional things.
dysfunctional the world is.
Yeah. And like Robin was talking about, this new software that we'll probably bring in next month will make a huge difference. Customers will be able to book their own rides through an app, and that'll be any time of day. Currently, our call center is only open for reservations 8 to 5 every day, so it gives flexibility.
Now, we do have the ability to book our own reservations through the automated,
Yeah.
but only if you've gone to that place before. Is this going to be different?
This is going to be different. So this is going to allow you to just type in the address. whether you've been there before.
That's a pain in the butt. I just talked to my operator.
Yeah, the IVR, it's in a phone system that you call into. But it only lets you request places you went to before. The new one will basically be an app that you can just type in the address and it'll pull it up.
What about the issues with the tech on the bus?
So that goes away and they'll be replaced, if we go with this new system, it'll be more of a tablet based. So it'll be
'Cause the
easier
other day-
to replace.
The other day we drove in circles and we had other people on the bus. I thought he was not going to my house, but going to
Yeah.
drop these people off. So we drove around in circles for like 3 minutes. I said, "Are you trying to get to my house?" And I directed the driver because the Greyhawk just had him driving around the circle.
Yeah. So you'll see with this, if we go with the new software, it's VIA, which we're using in Rome for Rome Loop. So we got to see how it is. The drivers out there love it. It's using Google Maps.
Also, that'll be.
So, yeah.
That in on the bus.
Yeah, so it'll have it all on the bus for them and the points of interest, things like that. So it makes it much easier for a driver and kind of tells them where to go rather than right now we're using Logis on the Greyhawks. The signal's not the best and the directions aren't the best. So,
Yeah, we drove around on Northern Lights Circle about 3 times, and I said, "Are you trying to get to my house? Let me give you some directions." And a lot of people on call bus cannot help a driver if they're lost trying to find their location.
Correct.
I am probably one of a handful.
So yeah, that's one of the reasons we're looking at new technology.
You're going down
Reach the end of line.
Yes, you're hitting my list.
We're listening, we hear you.
Yeah.
We're hearing our customers and, certainly helping our drivers along the way. So.
And I don't think it hurts. The people who are in Washington saw what a
Yes.
massive mess.
Yes. We were flagging cars down in the middle of the street to try to find Tina a ride after they scheduled a ride, and then said that we called, Brad was on the phone with one, I was on the phone with
This
another.
was the most bizarre situation I've ever seen. I'm actually stopping taxis. I say, can we send someone that has, a disability? And it was just the worst situation I have ever, put it this way, I never knew how bad things were until I experienced it. And it was just the worst experience I've ever seen. But I said to Tina, we're all together, we ain't going anywhere. So no matter how long this is, we're gonna get this right tonight.
And
Terrible.
although it was terrible, I was sort of glad you guys saw it because it brings people into my purview of how life is. And life is sometimes very unwheelchair friendly.
I agree with you. I agree. I don't jump out in traffic stopping people.
That
explains a lot.
Any other questions for Josh?
Thanks, Josh.
Thanks, Josh. Bruce?
Good morning, everyone. Almost in the home stretch, right? After 6 months of user testing and back-end configuration tweaks, our trapeze upgrade is complete. One of the things that was a significant efficiency driver in getting all the workstations upgraded was the Microsoft Manager server project we completed. We had to upgrade close to 40 systems, and previously that would have required manual integration, but we were able to push that update out to all the workstations, so that was a huge success for us in that regard. We've upgraded all the physical servers supporting the video cameras in all locations. Once these new systems have been online for 30 days, the old systems will be decommissioned. We've also installed and configured 2 new certificate authority servers following Microsoft's best practices. These servers issue and validate digital certificates. It authenticates users and devices and provides end-to-end encryption for these entities. We're getting ready to start an infrastructure project at the hub, installing a new secure switch cabinet and rerouting network cables to support a CSR move over there.
The hub in Syracuse.
Yeah, this one here. Cybersecurity, we acquired our privileged remote access system I've talked about previously and are working with a vendor to get that fully online and operational. This is the system that gives us the ability to control and monitor all outside remote access from the various vendors that provide support. We also did some upgrades on our external firewalls to address critical vulnerabilities that we've identified. Those firewalls is what protects, everything from the outside coming in, and vice versa. Another thing, we had several discussions over the past few months with one of our vendors identifying some serious security concerns we have with their software and configurations, and we're working with them to get that resolved. If you'd like more specifics on that, I can discuss that more detail after the meeting. The last thing, future projects, we're looking to get our Active Directory environment upgraded. This is going to require new hardware and installation services. And Active Directory is the central repository for all domain accounts such as users and computer objects, and it controls their levels of access. And with that, that's all I have unless anybody has any questions for me.
Firewalls work.
All their work, yes. It just required an update to address security vulnerability.
You still get hits of people.
All the time. Like I said, you guys are more than welcome to come down and we can actually show you live stuff that's happening.
Don't go down there because you want to.
Don't let mine.
Thanks,
Great
Bruce.
job, Bruce.
Thanks, Chris. Morning, members of the board.
To bring to you our training.
Perfect.
As you know, it's been hard to find mechanics, and I know we get this new contract in place. Even if we do get mechanics in here, we need to train them to work on buses. In addition, when we get training from, say, a servicer who comes up to the ranks, they need to get a lot of training, and it takes a long time. Our team consists of Josh Kidder, the manager of Fleet Technologies, Brian Jones, our senior maintenance training supervisor, Chad Thompson, who's in the corner over here, a warranty manager. Rob Wells, our lead trainer, Eric Burrows, and Ryan King, both first class mechanics. In Syracuse, we have specialty departments. So we've got engine, air electric, floor, which consists of repairing brake, suspension, steering, body shop, HVAC, truck bus, which takes care of all the call buses, our buildings and grounds vehicles, supervised vehicles, tire shop. Our outside locations are a jack of all trades. They don't have specialty, so they just work on buses, and when they have an issue with the bus, they send it back to Syracuse to get repaired if it's something they can't tackle. We've set goals forth in the department stating that we want to upgrade and updating and creating better tests for mechanics for all the classes, which is around 30 different tests. Now there's 4 different classes. We have trainee, helper, mechanic, and first class. It takes about a year, if not longer, for a trainee to move up to a helper. It takes about 2 years for the helper to move up to a mechanic, and another 2 years for a mechanic to be in first class. So in essence, it's around a minimum of 5 years to get a seasoned mechanic going to be able to work on
How do
our
you
buses.
measure their experience if they have a certain experience?
Yes, there's tests they can take, and it can apply them to be like a mechanic or even a first class if we got some, like if you get somebody that transferred from another agency and they're skilled, they can come in, they can become a first class.
Okay.
They can take this test. Then we also reach outside to vendors or other places to get more training. And training plan for this year, we've got paint and wrap for schooling for buses. Gillig is constantly coming out here giving us training, vinyl graphics installation, tow truck training. We'll bring Big Reds out here to provide training for our mechanics and what it is, usually retraining or if there's something new in the industry. Then we got this new one, which is electric hybrid vehicle training through Universal Technical Institute. And this is more for cars, supervised vehicles, things like that. We take this very seriously, support our mechanics to be the best they can to keep our vehicles running. And also, Barry Carr from Clean Communities reached out to us for a support letter. And this is a grant opportunity to get EV training for agencies. Now, this is a multi-state EV technical training grant application sponsored by Clean Communities. Clean Communities is a nationwide organization for making communities greener and better. And there's not been a lot of EV training in the industry. Other agencies such as TCAT, Thompson County Transit, OCC, and NYSERDA are supporting this grant application. I brought this to Chris. Chris signed off, and we sent it back to him to support. In the grant application, it said there have not been coordinated or corresponding investments in EV workforce and safety training. Training for vehicle technicians lag far behind the rapid acceleration of EV adoption, which is so true. I mean, we see this all the time. And we're really hoping this is going to help us, because when we're looking at probably getting EVs here in the near future, we'll have the training there ready for us to train our mechanics. Yeah.
What was the number again of EVs, our initial number we were gonna?
4.
You know, it was interesting in Washington too, the people that are for it, there's people that are adamantly against it, so I learned a lot about that.
Is anyone else from New York State there hearing that?
I mean, there was other agencies, you know, Albany was there, Rochester was there, so there was, you know, the other 4 agencies across the thruway were there, you know, meeting, not with the same, you know, folks, but, you know, we all met, you know, with our respective elected officials, and then we were in the meetings with other individuals. Yeah, it's you know, it's very clear that policy is outpacing technology, but we know here in New York State, you know, they have some agendas in mind, and you know, one of them, the first one that we know is a benchmark is the 2035 small vehicles. You know, so our supervisor cars, our other vehicles like that. The pending legislation on the fixed route buses, the bigger buses, is still being tossed around. It wasn't approved now again this budget, but we know it's probably near, you know, something that could come to fruition. So we want to be ahead of it with the training, and hopefully get the buses here that lets, you know, our mechanics and our operators see them and truly get data. I mean, they're so minimal as far as the technology. You know, Albany has 4 buses, Rochester has 10 buses, you know, so you're not really all in, and if you needed to, you can go right back to your diesels and CNGs. So, you know, to truly test the technology, to say it does work for us, we're all in, nobody's able to commit to that yet. So, you know, we're just trying to see where we are, and does it work, and if not, we can at least have, you know, our own knowledge and our own experience to say this is not working. I mean, TCAT being on the market, but they just announced 2 weeks ago they're giving their 6 battery electric vehicles, they're going back to diesels. It's not working for them. So we're probably going to see that more and more across the industry right now.
Is it expense? Is it location? Is it the reasons why? I'm just curious. They think it's not working for them.
A lot of it is the technology. You know, to meet the needs of what we do. You know, our vehicles are on the road 18 hours a day. Right. Technology can't keep up with that. Then when you start factoring in load, temperature, terrain, you know, that all is a factor into it. You know, maintenance and repairs on it, stability in the market is tough. You know, the safety measures are big. We've seen, you know, some catastrophic events, thermal events that have happened across the country, but you know, across the world, it's putting people in concern. And until they can embrace that and solve some of those concerns.
You know, remember 10, 20 degrees below zero, central New York, going up hills.
Yeah.
I mean,
I mean, based on the studies, you're seeing 50% battery degradation in cold weather climates.
Right.
And that's before the bus even leaves the garage, saying it's fully charged. If you've ever taken your phone outside and taken it out for a few minutes in the cold weather, your battery on your phone dies. So imagine doing that with one of these vehicles.
Just in technology-wise going forward, I would think it would become more cost efficient. Technology's gonna get better.
Yep.
Somehow address that issue, so it won't solve it completely, but at least.
Yeah, and hopefully as the technology becomes more and more prevalent in the market, demand is there. You know, you'll see the price of these vehicles come down. You'll see the production of hydrogen come down. You know, and hopefully that'll start cost. You know, when we started in the CNG market, the vehicles were more expensive than a diesel, but now they're very relative. So we're hopeful to see that as technology continues to gain momentum.
Any other questions?
Thanks, Jim.
Thank you.
Linda?
So I wanted to talk to you today about our warranty recovery program. as recipients of FTA funding for the purchase of rolling stock, we are required to have a system in place for identifying warranty claims, reporting claims, enforcing claims against manufacturers. And the FTA requires agencies to aggressively seek reimbursement for warranty repairs. So we purchase a warranty with all of our vehicles. Currently, Fixed-Root, it has a 1-year bumper-to-bumper, OEM warranty, OEM meaning original equipment manufacturer. And for our paratransit vehicles, they run 4 to 7 years or 125,000 miles. So we have a warranty recovery program. It was created by our warranty manager, Chad Thompson, who's here today. When he started here at the authority in 2014, he started working in conjunction with our maintenance department and our parts inventory storeroom department collectively to put processes and procedures in place to perform all the functions required for our warranty program. So this includes claim processing, repair campaign, coordination, training and education. As Jeff said, it's very important for us to constantly be training and retraining our staff. It's very essential for warranty repairs so they aren't voided. So training, retraining, educating our employees, ensures that we are optimizing our warranty recoveries. So the benefits of having a robust warranty program is it's all about the recovery. So warranty claim recovery comes in the form of OEM reimbursement, either a payment, a part, or a credit. Not seeking these would mean more of a benefit to the OEM than to us or our taxpayers. So another cost recovery that Chad has implemented since he's been here is our core recovery process, and that includes returning coreable parts to vendors. Coreable parts are parts that they have a fee charge for, kind of like a deposit on the part. If you don't return it, you lose that. Those core charges can be anywhere from $200 to $1,500 depending on the type of part. And core charges are essentially an incentive for vendors that they use that because they want that part back. So to track the effectiveness of the warranty program, I've been charting the recoveries that we receive from processing the claims and the core reimbursement. This also helps me identify trends as the activities will be cyclical depending on the lifetime of the vehicles. This is an 8-year analysis of the recoveries. Over the 8 years, we've recovered over $2 million in credits on average. This is about $300,000 annually. So as part of the succession plan, this warranty program is being moved into the maintenance area. It will be under Jeff Huff and Mike Rice. That was effective April 1st. So thanks, Chad, for creating our program and continually working on recoveries going forward.
Thank you, John.
Awesome.
That's it.
And that concludes everybody's report, Mr. Chairman.
That's very good on the warranty and good work with yourself. Okay, moving into the Audit and Finance Committee report, we had a motion to bring it to the full board, our insurance renewal. John Aylock came in, gave us some information about what's going on with the increase in the insurance world right now. So, but Linda, as always, has assured me that we budgeted accordingly with that. So at that point, I made a motion to move this for adoption. Robert, second. Darlene, any discussion? All in favor? Aye. Okay, we had a resolution for award contract for pest control services. Chris advised us on what was going on. It's a 5-year term to Orkin. We had 5 bidders, and the numbers seemed to work out quite well. At this point, I need a motion. Tina, second. Darlene, any discussion? All in favor? Aye. Next, we had Tara came up to discuss the grant agreement. And let's see. Oh, we'll come back to you. Since I'm on the grant. The grant for
$12,284,075. Motion was made to, bring this forward for adoption. I have a motion. Julius, second. Neil, any discussion? All in favor? Aye. And resolution 3B, authorize contract award for legal service in various areas. General counsel, personnel, pension, recommendation based on the evaluation of proposals, staff recommends contract award to Mackenzie Hughes for general corporate counsel, accident litigation for our friends. They released a bond to Kingdom Pension Services for a 5-year term commencing August 1st. Caitlin brought that forward. Motion was made. Nice discussion on adopting that. My motion. Tina, second. Neil, any discussion? All in favor? Aye. Mr. Sulis, Pension Committee report.
This morning, we had a pension committee meeting. Alesco Advisors gave us a detailed overview of the authority's returns, allocation, and we had an in-depth discussion about the market and the economy. That concludes the pension committee report.
Yeah, that was good. That was a good conversation, I think, today.
Yes.
I think we all learned a lot. That was good. You know, when they come in front, they have good intel. I always encourage everybody to ask questions. At this point, Mrs. Williams nominating is going to bring forth the slate of officers for the 24-25. Wow, it seems so. Yeah, it seems so. 25. You know? You hear these numbers sometimes, and some of us in the room, they could remember the big controversy of 99 to 2000. You know, run to the bank, get your cash, don't get it. Boy, it seems.
Get your prescriptions filled, you may never get your medicine.
Right. 25 guys. Wow. Ms. Williams.
Yes, as chairs of the nominating committee, Lord, I present the slate of officers for years 24 and 25. Nick Lino as chairman, Anthony Davis as vice chairman, Darlene Lattimore as secretary, and Tina Fitzgerald as treasurer.
Any discussion? We have a motion. Robert, second. Neil, any discussion? All in favor?
Aye.
Aye. Very good. The other thing I'll be sending out to the board is the committee assignments. I'll send this out to the board, and Luella will be heading up our nominating committee. Darlene, governance. Joe Hardick, pension. Monty Flynn, personnel. Neil Burke, legal. And myself still with in finance, unless somebody really wants it. I'll send it. There's no action required on that. Any other comments?
I think last month we discussed the RFP service for the CEO search.
Yeah.
Been any updates?
Yeah, Jake, go ahead. We're gonna put it on. We're gonna have a discussion next month. Go ahead, though, Jake.
Yeah, Frank, an RFP was let out, the beginning of April, I believe, and we're in the process of getting responses back at this point.
So things are in process. Okay, have a great weekend, and thank you for your service. We're adjourned.